Imagine waking up one morning to see headlines across every major financial news outlet. Ripple, the visionary company behind the digital asset XRP, has just completed the acquisition of Uphold, one of the world's most dynamic cryptocurrency exchanges, and without question, the beating heart of XRP trading. The reverberations are immediate. Social media explodes. Telegram channels, Twitter feeds, and dedicated crypto forums are ablaze with speculation, hope, and a fair bit of anxiety. Is this the long-awaited masterstroke that will catapult XRP to the top of global finance? Or could it open a new Pandora's box of regulatory headaches, technical hurdles, and market volatility for Ripple, its investors, and perhaps the entire crypto industry? Let's rewind a bit. The catalyst came from a single provocative tweet. Jack the Rippler, a well-known crypto influencer with a loyal following, posted a bold claim. Ripple will acquire major exchange Uphold Inc. XRP. He didn't hedge, he didn't add a question mark, he simply declared it as fact. Within minutes, the XRP community erupted. Was this just another round of crypto hype, or could it be the most consequential buyout in the space this year, maybe even in the past decade? To understand why this rumor has shaken the foundations of the digital asset world, we need to examine the players at the center of the storm. Ripple is not just any blockchain firm. Since its founding over a decade ago, Ripple has positioned itself as a disruptor in global payments. Its on-demand liquidity service has moved an astonishing $12 billion in cross-border payments in the year 2024 alone. That marks a staggering 130% increase from the previous year, a testament to surging demand for Ripple's solutions in a rapidly digitizing financial landscape. In the world of fintech, few companies can claim such exponential growth. Now let's talk about Uphold. While perhaps less of a household name than some of its competitors, Uphold has quietly become a linchpin for XRP's ecosystem, particularly as traditional exchanges have retreated from supporting XRP in the United States due to regulatory uncertainty. According to their latest transparency reports, Uphold holds over $4.5 billion worth of XRP, an eye-popping 69% of its total crypto reserves. Not only that, but Uphold is responsible for more than a quarter of all XRP transactions globally. That's more than 26% of the entire market's transaction volume. If you hold XRP, there's a very good chance you've interacted with Uphold, directly or indirectly. But what makes this potential acquisition so tantalizing isn't just raw numbers, though those are certainly impressive. It's the momentum. Uphold's user base is experiencing explosive growth. In the first quarter of 2025 alone, its usership surged by 60%. Thanks in large part to an aggressive and wildly popular XRP rewards program that has taken the United States by storm. Industry analysts now predict that Uphold's user base could reach 15 million by the end of this year. Dr. Sarah Green, a highly respected regulatory analyst, summed it up. Uphold has evolved from just another exchange into the backbone of the XRP-FI movement. Any shakeup here could ripple across the entire ecosystem. Let's put this in perspective. Ripple has invested over $500 million since the start of the decade in strategic acquisitions, partnerships, and technology development. This aggressive expansion signals a relentless drive to build a global payments network that could one day rival the likes of Visa and SWIFT. Yet, Ripple's path has been anything but smooth. Its bruising legal battle with the Securities and Exchange Commission in the United States has already cost over $200 million in legal fees alone. The outcome of this fight continues to cast a long shadow over Ripple's ambitions, especially when it comes to operating freely in the United States and other heavily regulated markets. Now, the acquisition rumor shines a spotlight on a series of complex, high-stakes questions. First and foremost, regulation. Uphold operates in more than 80 countries worldwide, each with its own tangled web of compliance requirements, from know-your-customer protocols to anti-money laundering laws and cross-border licensing. If Ripple goes ahead with this acquisition, it would undoubtedly trigger the most intense regulatory scrutiny the crypto industry has ever seen. As legal analyst James Smith warns, this would be one of the most heavily scrutinized deals in crypto history, given the focus on compliance and security. Then there's the financial dimension. Uphold's valuation has reportedly surpassed $1.5 billion, with projected revenues climbing past $300 million for 2025. A remarkable leap from only $80 million in 2022. This kind of growth makes Uphold an attractive target not just for Ripple, but for other industry giants as well. Rumors abound that Binance, Coinbase, and even global financial heavyweights like PayPal and JP Morgan are circling, each with their own reasons to want a slice of the XRP action. So, what would actually happen if Ripple pulled the trigger and acquired Uphold? The future could branch out in several fascinating directions, each offering both immense opportunity and significant risk, not just for Ripple or Uphold, but for the entire digital asset landscape. On the plus side, Ripple would instantly inherit Uphold's rapidly expanding user base, which could reach 15 million by year's end if current trends continue. That's a direct pipeline to one of the most engaged crypto communities in the world. Imagine the implications for liquidity. Uphold already processes an average of $50 million in XRP transactions every single day, controlling nearly 70% of its reserves in XRP. With this kind of firepower, Ripple could supercharge adoption, deepen liquidity, and roll out new financial products on the XRP ledger at a scale previously unimaginable. This could be a game changer for Ripple's planned stablecoin, RLUSD, which aims to bridge traditional fiat with crypto and improve cross-border settlement efficiency. With Uphold's infrastructure and robust compliance framework, backed 100.6% according to internal disclosures, Ripple would have a rock-solid foundation for expanding enterprise-grade financial services. But let's not sugarcoat the challenges. Dr. Sarah Green reminds us, an acquisition of this size and complexity would attract intense scrutiny from both American and European regulators. Ripple's ongoing battle with the SEC has already cost hundreds of millions and remains unresolved. In addition to legal risks, there are substantial technical barriers. Integrating Uphold systems with Ripple's network means bridging vastly different architectures, maintaining compliance in more than 80 jurisdictions, and ensuring uninterrupted service for millions of users. As Alice Johnson emphasizes, the real test will be in the details. Integrating platforms at this scale requires surgical precision, patience, and a willingness to invest heavily in both technology and people. There's also the prospect of heightened competition. Binance, Coinbase, JP Morgan, and PayPal are all rumored to be evaluating their own bids for Uphold. Should any of them swoop in, the strategic equation could shift overnight. The acquisition price could be driven to unsustainable heights, or Ripple could find itself locked out of a critical asset. And let's not forget the IPO route. If Uphold's leadership chooses to go public instead, it could attract a flood of fresh capital and potentially forge new alliances, all while retaining its independence. This scenario would introduce a new layer of complexity, as public companies face even more rigorous regulatory and financial disclosure requirements. For the typical viewer, whether you're an investor, a crypto enthusiast, or simply curious about the future of global finance, there are several important lessons to draw from this drama. First, it's a real-time masterclass in how strategic acquisitions can reshape entire industries. While most people focus on token prices or flashy headlines, the real value often lies deeper, in the infrastructure, the payment rails, the technology stacks, and the teams working tirelessly behind the scenes. Ripple's story demonstrates that regulatory clarity, technical scalability, and community trust are every bit as crucial as market capitalization or trading volumes. Second, there's an essential lesson about risk. Rapid growth, like Uphold's 60% surge in users or Ripple's 130% jump in cross-border payments, is thrilling, but it also brings heightened scrutiny and daunting integration challenges. Savvy followers should pay attention not just to the headlines, but also to the fine print, regulatory filings, compliance updates, technology roadmaps, and leadership changes. As venture capitalist Emily Carter notes, a company so heavily concentrated on a single asset like XRP is positioned for both extraordinary opportunity and exceptional vulnerability. Any shift in regulatory stance or market sentiment could have outsized effects. Let's also look at the broader historical context. Ripple is no stranger to ambitious partnerships and acquisitions. Its previous stake in MoneyGram, for example, was heralded as a breakthrough in bridging crypto and traditional remittances. But that partnership ultimately faltered under the weight of regulatory uncertainty and volatile market conditions. The lesson? Vision and ambition are essential, but adaptability and cautious execution matter just as much in the world of global finance. Meanwhile, the rise of XRPFI, decentralized finance applications built on the XRP ledger, provides a glimpse into the future. Over the past year, the market capitalization of XRPFI projects has soared by an incredible 400%, reflecting an explosion of innovation and adoption. The XRPL, or XRP ledger, now processes an average of 5 million transactions daily, underscoring its scalability and reliability. This makes it a prime platform for integrating a heavyweight like Uphold, should Ripple succeed in acquiring it. But challenges persist. The regulatory landscape for both Ripple and Uphold is only growing more complex. Ripple's ongoing legal battle with the SEC continues to shape its strategic options, especially in the world's largest financial market, the United States. Uphold, for its part, must navigate a labyrinth of licensing and compliance demands across more than 80 jurisdictions, each with unique requirements. Failure to maintain rigorous compliance could expose the combined entity to severe penalties, reputational damage, or even operational shutdowns in key regions. On the technical front, integrating Uphold's existing infrastructure with Ripple's technology would be a Herculean task. Alice Johnson warns that this isn't just a matter of writing new code. It would require a coordinated overhaul of both back-end systems and user-facing applications. This means months, if not years, of investment in engineering talent, cybersecurity, and cross-platform testing. During this transition, maintaining user trust would be absolutely critical. Any hiccup, such as outages, security breaches, or delayed withdrawals, could spark a crisis of confidence that ripples throughout the broader crypto market. Financially, the stakes could not be higher. With Uphold's projected revenues surpassing $300 million in 2025 and its user base potentially reaching 15 million, the company represents a rare prize in an industry where trusted, compliant exchanges are in short supply. Ripple, having already invested over $500 million in acquisitions and strategic deals since 2020, would need to weigh the cost of acquisition against potential synergies and long-term growth prospects. David Lee, a blockchain analyst, believes that the real value would come from Ripple's ability to leverage Uphold's user base and seamlessly integrate it into its broader ecosystem. Let's explore 3 plausible future scenarios. In the first, Ripple successfully acquires Uphold, overcoming regulatory, technical, and financial challenges. This would likely lead to increased XRP adoption, enhanced liquidity, and the rapid rollout of new financial products tailored to both retail and institutional clients. It could also accelerate the mainstream acceptance of RLUSD and decentralized finance solutions powered by the XRP ledger. However, the integration process would be fraught with challenges, and any misstep could diminish potential benefits or even threaten the stability of both companies. In the second scenario, Uphold opts for an IPO, attracting a broader range of investors while preserving its independence. This could inject fresh capital and fuel even more innovation within the XRP ecosystem, but it would also expose Uphold to the merciless scrutiny of public markets and regulatory authorities. Market volatility, shifting investor sentiment, and ongoing compliance demands could create fresh challenges for the company's leadership. The third scenario involves another player, perhaps Binance, Coinbase, or a traditional financial titan like JP Morgan, stepping in to acquire Uphold. Such a move would reshape strategic alliances within the crypto industry and could either strengthen or fragment the XRP ecosystem, depending on the new owner's priorities and resources. Integration challenges and regulatory hurdles would still loom large, but the dynamics of competition would shift dramatically, perhaps even pushing Ripple to pursue alternative strategies or partnerships. So, what practical advice can we glean from all this? For investors, the message is clear. Focus on fundamentals. Infrastructure, regulatory compliance, and leadership matter just as much, if not more, than token prices. For developers and entrepreneurs, the lesson is to anticipate both the opportunities and the risks that come with explosive growth and industry consolidation. And for policymakers, the unfolding drama is a reminder that clear, consistent regulation is critical to fostering innovation while protecting consumers. As for Ripple, the company's relentless expansion over the past 5 years, spanning exchanges, technology firms, and global banks, signals a willingness to take big risks in pursuit of even bigger rewards. Whether or not the Uphold acquisition materializes, it's clear that Ripple will continue to shape the future of global payments and decentralized finance. So, will Ripple make the bold move and acquire Uphold? The numbers, the strategic fit, and the momentum all point to a real possibility. But nothing is guaranteed. Regulatory hurdles, fierce competition, and daunting technical integration remain very real obstacles. Yet, if the deal goes through, it could herald a new era for XRP, pushing it ever closer to mainstream adoption and fundamentally reshaping how value moves across borders. What's your prediction? Could this be the deal that transforms Ripple and the entire XRP ecosystem forever? Or will another giant swoop in to seize the prize? Drop your thoughts and forecasts in the comments below. And remember, subscribe to stay ahead of the curve on the latest in global economics and technology. This story is far from over.